Hello friends, this is Martin Secret, the channel for learning about trading and investing. Welcome to a brand new episode of Bank Markets Tomorrow, the daily market analysis show where we look at what happened in the markets today and how we can plan for a better trade tomorrow. And this is analysis for December 1st, Wednesday 2021. If you're not subscribed, please subscribe and share it to your friends and colleagues so that it helps us all. Alright. So market hit the resistance today, right? After a big move, right? So does that mean more corrections are due? Let's analyze and see what exactly we can derive it, right? So December 1st, tomorrow, Wednesday, 2021 is what the analysis is for. We look at all of these parameters on the charts and whatever parameters on the website, and we will also have that analysis on additional parameters and we'll come up with some actionables also. So without wasting time, let's get into and see the chart pattern. See, it's an inverted hammer, both on Nifty and Bank Nifty, right? So inverted hammer obviously means that it was a big up move and it faced resistance and then got pulled by the bears downside, right? So what happened? 70 points of gain finally, right? Closed red Nifty with 70 points down. The low was close, lower than the previous 2 days close, and it formed an inverted hammer. So it faced resistance, and imagine that resistance was faced after a 1.5% move on the upside in the morning. Bank Nifty also closed red with 280 points down, right, at the end of the day, right, and it's closing lower than the lowest close in the last 2 days, the lowest close in the last big correction. It means not big, the 14-15% correction. This is the lowest close that happened today, and finally formed the inverted hammer and after facing resistance. And remember that it was 2.3% of move that happened in the market opening today in the Bank Nifty. So intraday, Bank Nifty and Nifty shot up big in the morning, and then it fall down, gave up everything, and not everything, almost all of it, and then fall down additional 1% from the top. If you look at that, right? So intraday, this is what happened, right? Market went up. This is 15-minute charts on the Nifty and the right side Nifty. It shot up, right, 270 points something, and then fall down more than that, around 400 points, right? So nearly 763 points up, shot up, and then fall down. Huge, fall down a lot. 3.3%, 1,250 points it fall down from the top if you count, right? So big up move to breakout, failed, faced resistance, and fall was equally damaging. This is exactly what happened, right? This is the price action, and Bollinger Bands clearly showing bearishness, walking on the bands on the downside. The volatility is expanded, and it's clear indication that the trend is clearly downtrend. Suppose resistance remains the same, not much difference is happening, because today what has happened is it tried to bounce up and then move further down, hit the resistance exactly at the 350, 450 that band, and then fall down, and then went back to where it started the support zone of 17,050, slightly close below it. So immediate support zone would be 17,000 itself, and upside resistance would be 17,250, 300 again, and then above that we have 17,350, 450 range, and above that we have 17,550, 600 range. Downside, the first support now if it falls would be the 16,900, which is a Fibonacci retracement level of 38, and then if that is gone, then you have the major support of 16,700, which is a gap support also, Windows gap, which is very powerful. So if that breaks, then you have 16,650 downside. If that breaks again, you have 16,450 kind of levels where it can go down. So that's the support resistance on the Nifty. On the right side, you have Bank Nifty, which did the same thing. It fall back to support. Right now, this is a support 35,600 to 39,900 that band. And then if it falls down from there, you have 35,000 range, and it falls up from there, you have 34,750 to 34,000, starting from 34,350 to 34,750. Big band is there, the support zone. On the upside, you would have, it has hit the resistance of 36,600. The first resistance would be that, to clear that, and then above that you have 37,000 range, and then you have 37,400, then you have 37,700, 800, that range, and then you have 38,000. So these are the immediate resistance and supports for the bank nifty. It's always seen. Divergence, no divergence are there. Momentum you can see it's clearly trending downside, right, below in the bearish zones, right. So the short term it is clear bearishness on Nifty as well as the bank nifty. It's very much evident. And trend indicator radius, if you see, it's in the bearish zones, negative on Nifty and the bank nifty, and the trend is, the bearish trend is increasing, is what the ADX strength green bar is showing on both the indices. Volatility again further shot up to close at 21.6 and now around 2% of up moving further. Remember that it had made a 40% jump this week and last week, and then it combined last week and this week to a 40% of jump has happened so far, and now it has extended to another 2% to make it 42%, and then IV is 70.69 and IVP is 56% rising up, right. So volatility has broken out to a new range. You have to be very cautious to be highly volatile. The market cycle has changed right now, right. Openness data analysis is showing the bearish charts again, so resistance is projecting outside, right. Polarity is what is projecting. You can see more polarity get added up towards the right side of the Nifty and the bank nifty both. Nifty 16,000 is quite far, is where the support is seen, highest put rating is seen there, right, which is kind of strange. You did go that far, 1,000 points dip in 2 days. Remember, this is the second day after tomorrow expiry, so that is not possible. That may be hedge, right. But then the highest support right now, the highest support is in 17,000. Then resistance in 7,500, and then today attended till 7,300 at levels, and then after that you have 18,000, which also may not happen, right. 1,000 points move in 2 days is not going to happen. So then the fight will be probably between 70,000 and 7,500 to hold the 7,000 at the expiry close, or so that is the most likely thing to happen. So 36,000 and 35,000 is where the put writing is seen. Bank Nifty and the resistance is at 38,000, and then 36,500 is where the next put writing highest is seen. Put ratio is 0.66 and 0.57. It's not that bearish, but not bullish either. Short build-up is what you see in the futures open data in both the indices. Look at the color red, right? So the IT performed good, and rest is all kind of bearish. Reliance, ICICI, all the big shorts which moved yesterday has failed today, and Kodak Bank fall has become even more. Tata Steel also for the Decent Bank. Big bets, but the major players, Reliance, HDFC, and ICICI Bank did not move today. So that's what happened. So IT performed in first TCS. Sectoral performance 0.5% up, IT is up, but remember that there's the gravestone doji that it has formed, which is kind of bearish. Short term momentum is lost. So sideways, you'll have to wait for any long positions on that. Metal, red again, 2% down today, and then lost momentum with bearish already, and then you'll have to wait. Auto 1% down, this is doji, and short term momentum is bearish, so you'll have to wait. Pharma, slight green, but momentum is sideways, stay away. FMCG closed slight green but inverted hammer, but momentum is bearish, so you can't do it. Reality closed green slightly, with the inverted hammer pattern, lost 0.6%. Short term momentum is still bearish, so you just have to wait. So none of the vectors are bullish for sure. So taking long position is rolled down until the momentum gets off. Institutional selling as of now is no. It must have been heavy selling again by the Fyers today also. Yesterday what happened is the Fyers again sold, so Fyers has sold 34,500, nearly that crores of shares in the cash market in the November month alone. Previous month 25,000 crores. So together it comes to more than 60,000 crores of selling has happened just November and October. Yes, I have been buying yesterday also. Today also they must have bought something. That's why the market did not crash too much. Right, so we'll have to wait for the data to come. As of now, this is the strategy I suggested. Dollar is hovering around this resistance zone, the channel top also, and the momentum is picked up. It is green, and it is dollar is strengthening and rupee is weakening. Dollar index also indicates the same. Yeah, so dollar index is indicating some bearishness. The strength of the dollar is decreasing is what? Dollar index is strong, but this is the currency pair USD INR indice that is, it is trading the indice that is here on the left side, which is showing slight up move at this above the 75 minute levels. But otherwise, dollar is weaker, slightly momentum wise also in the European dollar index. Crude oil is got bearish and fallen down, which is good. Just today even closed to 68 also, and further going down. Momentum trend, everything is bearish, so it is good for a bit. Gold is hovering around that same support zone, although it is bullish, it is consolidating. Okay, this market's showing some weakness, but in the Nasdaq, it was just not opened, and there's some kind of red in the European markets also. So this information can be validated only in the pre-market. So you have to check all of this European and US market indexes before it opens tomorrow, which would give you a clear indication if there is a big up movement, which will obviously reflect on the SGX also in the morning. So I will take the call from that. The actionables are Metropolis Healthcare, long issues. So this seems to be breaking out of this resistance zone. It is consolidating. So this breakout can be very big. But last time it attempted that, it failed. This time it has closed big above that. Let's see if there is a close that happens above tomorrow's candle. It is closing above today's candle. Then it means clear bullishness. So momentum is also on the edge. So you should put time stop loss for this on the entry candle, alert candle itself, because there is some choppiness in this stock. Although it is attempting multiple times to take out this resistance. So we have to be confirmed that this attempt is over and the resistance is taken out. Once that is done, then you can expect this much length of up move. That means 6 months. Big up move can be expected if it works out. But the only thing is, you have to put tight stops on, because it can again fall down to this level and again attempt. So this may be consolidating like this forever. You never know. So be cautious. Should be able to ready to accept the loss in case it fails. If you are trading in this time. This is not intraday, it is a push and call. Target push also is having a good trending move, good volumes, and momentum is good, trend is good, volumes are good, and channel up move is happening. There's a lot of space towards the channel top, so up move further can be expected. Central actionables for Brokerage Corporation and Metropolis Healthcare is long but carefully, cautiously bullish. So what the overall market view is bearish, moderate bearish in the short term. It's for tomorrow, it's bearish. So bearish chart patterns are seen everywhere. The lows closing since this correction started. Fundamental trend is short term bearish. Institutions are really heavily, so we just can't do nothing but be bearish. Right? It is foolish to think, even think about going long at this stage. Markets, even the intraday, you just have to be cautious if you're going for long only within the day. You have to be really cautious. Look at the kind of reversals that happened today. It's a V-shaped move that happened today. It went up, then came down in the afternoon. Exactly opposite moves, right? So market could react to the GDP data that has come today. So it can move up, or it can react, big way tomorrow. That can happen. But overall, if you see, we just had 10% or so of correction in the Nifty and 15% of slightly more than that in the Bank Nifty. So more corrections can happen if you want to roll it out, because we had an outlier rally of 18 months. And we are still corrected, retraced. If you consider, if you can nudge the retracement earlier, this done only till the 23. So there is a lot of space to go. Considering the fact that the US tapering, the corona bad news, the dollar shooting up, and all of this, if you consider it together, we have wrong on US flows, and that there is every possibility. But there may be up moves that can happen. You can get sell-on rally can happen, and you will be surprised to see that you do further correct. So that there is a possibility of that. Although tomorrow it may be up, you never know. Right, so you have to be cautious in this particular stage of market, right? With high volatility, volatility is blocking out of the range of 20. So it is even further short up today after 40% up move in the VIX, India VIX last 2 2 or 3 days it is again shot up, and it was about 21 today. So it is extreme bullishness area that you entered, and then choppiness can be huge, premiums can be very high, stop losses will get hit, the stop loss premiums will be high, and then your losses will multiply, and you'll be very cautious in lot allocation or capital allocation, and always go for hedge positions, vertical spreads. Even if your direction, you should go for a hedge portion so that your downside is not does not give you surprises, right? And non-direction, this is the time to stay away from non-direction. Even if you're going off for a longer term, for monthly, not for weekly, it's very difficult to capture the range. Especially when the market is falling, it's very difficult to do the adjustments when the volatility is high, right? So that's my view, and I hope it helps you to form your view and have a good trade plan for tomorrow. If it helps you in some way, consider hitting the like button, share to your friends and colleagues. Happy trading and happy learning. Bye.